Hello everyone. Today's session is going to be about stops and targets. Basically, it's kind of tough to define stop and targets without a context. So I'm gonna try to do something here that it's basically moving through the strategy that I use for my tradings. So before I continue, remember to to push the like button if you like the video, and also subscribe to the channel, so in that way you would be alerted for new videos I put in YouTube. Also, remember that I trade in Apex funding, and then if you see the description, you would find the link to their portal, and also a discount coupon where you can save 50% of their fees for giving you this funding. If you have any questions on that, let me know. I have received already some, and I'm gonna make a video about those questions as well. It takes a little bit of time for me to make videos and respond to the questions, but I will address those questions and others. So if I don't respond directly to the comment, probably I'm gonna wait to make a video on it. So remember that I'm not a financial advisor, so you trade at your own risk, and this is where Apex works very well, because if you are learning or you are just defining your own strategy on how to trade, this is a good way for you to put some money in the table, but not risk everything in there. So trading futures is actually very risky, but it has also very good rewards if you do good. So okay, let's start with the strategy. So as I mentioned before, so this is how I view a trading day. So basically, the first thing you do is to identify what type of market you are going to face, beginning of the day, basically. So I turn the computer on before 8 and start trying to identify if the market is in compression or it's in expansion in overall. So if I see a chart that is going sideways and not moving that much, then I kind of like try to see how many times that one touches the resistance or the support, and then I try to define a range, and then from there I start my day. Now, if the market is moving up or down, then I consider that overall the market is in expansion. So I would trade using different techniques. Okay. So when I say different techniques, this is what I'm talking about. So I add the analysis. I put levels of support or end resistance to the market that I'm saying. So if I'm bullish, I'm going to look for channels basically, or if I'm bearish as well, right? Channels if we are in expansion, and if we are in compression, I would look for ranges or support and resistance going sideways basically. Now, when I identify this, and this is what we're going to where we're going to put the trades, is to identify the setup. So if we are in compression, then we're going to try to identify if we're going to trade a break of that compression, and or if we're going to have a trend reversal, then we're going to identify that one as well. Pullbacks and failures are also things that I use, and those are setups that I have defined. Also, if we are moving to the upside, I trade, since I trade Renko, then I trade weeks out of either the cloud or the Ichimoku cloud, or the moving averages. So I use several moving averages, and I'm gonna in the videos that I make, you can see what those what the moving averages are. Okay, so let's discuss then how I see this. So I identify the day, then I add the analysis, and then I look for the setup. So the good trigger basically is to look for the right setup in the right technical support, and then that it's either in the right technical support or in the right technical resistance, depending on if you're going to be short or long, or if you're going to be bullish or bearish in the trade, and then this is going to be it has to be done in the right market conditions. So if you're bullish, you are not going to try to put bearish trades. Basically, that it is. So let's go to the. I'm gonna review today only expansion, and I'm gonna leave compression for a different day. So expansion is it doesn't happen all the time. It's more likely that the market is going to move sideways, basically. But expansion is when it moves to one side, or to one side to the market to the other, right? So we do have this one is a bullish chart. So if we see that either the moving averages or the price or the candles or the bricks are moving to the upside, then we're saying that we're bullish. Now from here you would say that or you can see that there's a support right here in the lower part of this channel, and then a resistance in the upper part of this channel. So how do you determine this? So you look for candles. Basically, it depends on what you're using. If you're using minute charts, or if you're using tick charts, or if you're using Renko charts, then you would see, okay, where are the areas that are triggering the resistance, or are indicating that there's resistance in this area. So if you're in a channel, the higher highs are going to be touching that upper part of the channel. It's with some frequency, let's say it that way. Okay, so you have here resistance right here, and then you have here support. So if you are bullish, and this makes sense, right? If you are bullish, you want to buy at support here, and then let it go to and hit the target at resistance, right? And now what is that is the trick, right? You go there, and let's say that you see that the market is touching the resistance a couple of times, then the third time it's probably that it's going to hit it right there as well. So that would be your final target. You can have intermediate targets, depending on different situations. So if the market you think that the market is, or give you, no, it's not okay. I'm gonna rephrase that. Trade what you see and not what you think. So don't use that that think statement saying, okay, I think that is going to go there. No, you have to say, I see that the market is going there. So if you see that it's going there and it's not reversing, let it go. And it's tougher to do it with one or two contracts. But if you're trading more than that, then you leave you put the first one and the second in a target, and then in an intermediate target, and then the third one you let it go, because you never know that when it's going to come down, right? So there are different strategies for this. So basically, what you have to see is that the initial stop doesn't go through this support area, right? If you see that it's going through and it stays, it can go through there. You can get scared and sell it. But if you see that it's moving up again this channel, then probably it's a good moment to enter it again. It depends on the moving average you're using. You can also look for confirmation that that the price is crossing the moving average, and then start triggering or being pushed to the upside above the moving average. The moving average is, in this case, is in compression in this here, but it's inside the channel. Overall, the bias is to the upside. So you go there, you see that the price comes down. Comes down in this compression area, maybe touches the support, and when it crosses your moving average, then it's going it is expected to move to the upside in there. So basically, this is what you're looking for, right? You have the targets up here, and then you have the stops down here. The initial stop, you can have intermediate stops in the inside the channel, but your initial stop should be close to it. Could be above the channel as well, but close to the channel. So the price should make a bounce out of this support, right? Okay, so here you have targets, and here you have stops. So basically what you are looking for is a move that is going to go all the way up. Now, how do you know that it's over there, right? That is the target, because at this point you have only this one there, maybe. Yeah, I don't know what the price is in the left side of this, but well, I may know, right, if I look at what's going on there. But let's forget about that. Let's say that this is the initial push of this channel, bullish channel. So you go there, and it touches once, and then you go up here, touches twice. Now you have 2 points here where where you expect that the price is going to revisit at some point, because you are bullish now, right? So it touches here, touches there, comes back, and what you would expect is that it's going to move once more there. So that would be your final target right there, right? Maybe it's going to move, and if you have a runner, then the price could move even higher than that. But basically, this is the big picture, right? Price can move up and down, and then touch this one once. Now you paint, let me put it here. So you paint let's see, you paint this line here, then with that you paint this one here, and then now you know that what is the channel that you are looking at. And now when you have, and where are you going to look for the setup and the trigger? Either a failure or a week out of the moving average, or a reversal or something, because it is compressing in here, right? So you have a move down, and then some setup needs to happen in this lower part of the channel for you to enter it. If you're using crossing above the moving average, then that would be your trigger, right? Or if you're looking for the price to cross above this last price as a breakout, then this price needs to be hopefully the closer to as close as possible as this lower part of the channel. Okay, so that is compression. Now for bearish, if you are bearish, it is exactly the same thing, but now you are looking at the channel that it's going down. So basically you're looking for entering short positions in the upper side of the channel. So how you identify it? Again, you have two let me put it here. You have one touch here, and then you have another touch there. So you have two points where you can that you can identify now where the support basically is. So you're selling right there at this area here, which is actually resistance. So basically, okay, let me you are looking on this on this area here, right there, to sell, right there. So you sell. What are you expecting now is that the price would move down below the moving average again, and then it's going to get your final target right there. Now again, you can evaluate what are you going to do if you have one stop. One contract. Then probably you want to look at somewhere here, right? Somewhere in the middle, or maybe wait for it to go all the way down. Depends on your tolerance of risk, right? But the stop should be somewhere up above here, and then the target should be below, somewhere in this area. If you have two contracts, then you probably want to let one running, and if sell the first one, put it at break even, and then let the other one run. Okay, so that's expansion. So basically, in the big picture, this is what these two situations is what you would need to see. So let's look at some charts now. Let me go here and get this chart right here. Okay, so this one is ES, and I prepared this one a little bit to explain why I use Renko, and what are the advantages and disadvantages maybe from Renko. So let's look at the action on Friday. Okay, so I did put so if you go here, then I do have the Renko and the tick chart 2000. Okay, and these are two charts that I normally I trade the Renko, but I do have the 2000 or the 1500 tick also open because it has some more information that I like to see. So let me put this one in two different panels. So I'm gonna put this one in a new panel, which is the Renko chart. And also, if you see here, let me apply it so I can explain it better this way. Okay, so basically what you have here in the upper side of this chart is the tick chart. So basically, if you see here, there are it's 2000. So I do have a counter here that brings the count all the way to 0, right? It's at 1097 now, 1091. You see that it's moving down. When it goes into 0, it's going to create a new bar, right? But the size of this bar, it depends on how much the price moves within this 2000 ticks or 2000 contracts being purchased, right, or sold. So in this case, it started somewhere around 4110, and it's moving down to 4106.50. Okay. Now, if you look at this, let me expand this a little bit. You know, I do have a Renko that it's moving also. I said here 4110, right, down to 4107. I'm sorry. What is this price now? 4106. 410. It's somewhere here now. It's 4106, but it moved all the way down to 4104. So the Renko chart, what it's doing is to paint bars based on. Let me go here again. Let me show this. Let me show this one, right? So in the Renko chart, in the tool here, we do have this is a 2, 5, 10. In the other one, I did have 4, 10, 20. But in the 2, 5, 10, basically this is the size of the chart. So or the candle. So you have a tick trend of 2. So every time that you have 2 ticks moving up, then it's going to paint a new bar with the lower part of that bar in 5, and then if it's going to reverse, it's going to go to it's gonna take 10 ticks to reverse there. So so yeah, that is the Renko chart, right? So I think that I have explained it a couple of times already in different videos. So basically, so I do have the channels coordinated here. So in this case, if I look for a couple of let's look at something that it's a little bit more trendy. So I'm here looking at this chart, and I say, okay, it seems that this chart is going down, right? Looks like it. So I'm going to paint. I'm gonna look for a channel that is going down that way, right? And then from there, I'm going to see how behaves from there. Seems that it's pretty good. And how it behaves from there, seems that it's pretty good as well. So from here, I can tell in the initial part of this move, probably I want to use. If I'm patient, then I can use this there in the upper side, or this one here. Either one is good. Okay. So what am I going to look for? So according to what I just said, if I'm trending down, first of all, I just looked for these 2 points, right? That point and that point, or that point and that point. And now I'm gonna wait until the price goes all the way up here. and now when it goes all the way up here, then I'm gonna see what is going to be my criteria in this area to enter the trade, right? If you see here in the Renko down below, in this same area, the price already made a touch, and then that one there could be a good entry right there. It reverse entered right there. The stop goes up here and then moves down. Then it didn't continue, but it made a lower high from this there. So if I didn't move the stop, I would be still in the trade, right? And then it's going to move in there. If I've met the target, then I have either one target off, one target down, or something happened with my cursor here. Probably. Let me see. I'm gonna need to pause the video a little bit, I guess. Seems that it's doing some weird things. Okay, but anyways, let me see. I'm gonna do it this way. Okay, so here in this area here, the price keeps bouncing below this channel, right in the upper part of this bearish channel. And then here we do have, if we connect here, we do see that we are kind of in a channel, and there's a break out of the out of this compression moving down, right? So you see there's another one there, and there's another one there. Now here it's going above this channel, so the channel is no longer respected. There's an area here where you're going to see that there's a channel, and then there's a breakout of the compression, right? And then now it's a little bit safer to take a bullish trade right there. Okay, makes sense? Seems that my Ninja Trader is doing something weird, so I would need to restart it. But anyways, let's go back to this thing here to review what we saw, right? So basically, you see the moving average is going in the bullish direction. You see the price moving also in between the channel. Here you put the stops below or close to this area here. Here is where you're looking for your setups, and then here are your targets. You can have intermediate targets based on your either pivot, floor pivots, what happened previously in the price. So if you have let's do this. So if you have a price that a candle that came here in reverse, so let's say that we have another one, and then you have another one here, right? So maybe this one, I'm gonna put green here. This one would be a level that you are going to look for, right? Because here you have some resistance here. So if it breaks out of this resistance to the upside here, you like to see that, right? So there's probably a break on price right there, and then there's a breakout of this congestion or this compression, and then this price is going to move all the way up here. Okay, all the way to that target. Okay, so same things apply to the bearish side, and yeah, so that is how you stop, you apply the stops and targets. So that is in the big picture. Now you have to try to master the setups and the trigger, right, in the areas that you want, moving to the targets that you want in expansion. I'm gonna make a different video for compression because it's a totally different technique on how to trade it. Okay, so hopefully you like this video, and let me know if I can respond to any questions. Thank you so much for watching, and thank you so much for proposing making a video about targets and stops.